Same thing, business analysis. I look at it, they sell EVs, electric vehicle. They are one of the top sellers for selling EVs. But I realized BYD is also their close competitor. Yeah, I know Tesla is the more popular one, but hey, actually BYD, I was quite surprised in terms of the number of vehicles sold. I think BYD is actually quite comparable based on some websites. So anyway, Tesla and BYD, now they are two main sellers for EVs, electric vehicle. I actually went to look at the company. Very interesting. So I think there are videos. You just go to the website. There's actually videos on Investor Day whereby you see Elon Musk talking. And I found this particular deck to actually explain about the company. Okay, I will send you all this link. You all can actually go and read yourself. It's beyond me anyway. So I'm actually not so high-tech. So what I understand is this, they are not just an EV company. So basically, they have this vision or maybe objective of, now we use a lot of fossil fuel, and they actually want to turn it to other forms of fuel. And EV is just probably one of them. But I think this is their long-term goal. Okay, so basically, they really want to reduce the fossil fuel use for the world and, use other form of, what do you call that? Ways to generate electricity or use electricity. So, okay, sorry, I'm really not so techy, but I think you should go and read more to find more about this company. So long story short, I don't think this is just an EV company, okay, but probably a very interesting energy company. Okay, so I think no doubt about it, this is definitely a growth stock. Okay, they are doing product of the future. If things go well, okay, their revenue going to grow tremendously. Sixth has, interestingly, they actually do quite okay. So that is another reason why I'm willing to look at Tesla. So now at least they're actually making profits. They're actually making profits. Their financial ratio is actually quite okay. So this one I'm just being stringent. The past 3 years, in fact, the past 4 years, I think, past 3 years are profitable. Okay, of course, 5 years not, so I just stick to it, but actually past 3 years is actually profitable. So for a growth company, I think that's acceptable. So this is another reason why I don't mind putting Tesla in my radar screen. Okay, so this is the interesting part. I actually did a comparison. As you can see here, I used the top five numbers. Okay, so interestingly, the top 5 EV players now we have is Tesla, BYD, SAIC, Volkswagen, and NIO. Okay, so if you talk about the pure EVs, which is Tesla, BYD, NIO, so PE 52 is, probably seems okay, because BYD is 51, NIO is not even making money yet. Okay, again, don't talk about dividends, don't talk about PB. So based on PE, 50 over time seems to be quite okay, but of course, as you all know, anything above 20, I find it's high, but for growth stocks, that is something we may have to live with. Okay, so that's from valuation perspective. I'm not saying it's cheap, but it seems like it's normal, okay, to have this kind of PE. Okay, I did DCF. Like I said, DCF doesn't work very well for companies like this. Okay, but in any case, it can help us to do some scenario analysis. Let me demonstrate what I mean by that. So of course, this is a growth company, everybody know, but how much growth is required to justify their current valuation? So this is what DCF can do. As mentioned, I need to look at 3 years because the first 2 years, they are actually still not making money. So forth is not relevant. So I only use the past 3 years. So the DCF doesn't mean that always to be 5 years. It should be using those periods whereby it's relevant. Okay, so I look at the past 3 years only. And if I don't change any numbers, okay, we're looking at the revenue growth of 60%. 60%. Okay. Okay, the beta, so you can see when the beta of 2, right, your required return is higher. So you can see that this stock is more volatile. So by right, this stock, if you want to buy, you should expect high return. So what they suggest is about 70%. So if I don't change the numbers at all, that means just based on last 3 years with the revenue growth of 61%, okay, my DCF value is about 222. 10% discount is about 200. Current price today is 189. So it's actually based on the last 3 years, which again, like I said, not a very accurate one, but as much as we can. So now the question here is this: do you think that it can grow for another 60% continuously for next 5 years? This is what my DCF is actually basing on. Okay, I am actually based on this model, right? I'm saying that if let's say Tesla can grow for 60% for the next 5 years, yes, then this is the value that this is the fair value. So I personally don't think so. I did some further research. What I did here is this: I actually go to Yahoo. Apparently, they have actually interviewed some analysts to give a sales growth forecast. And they are looking at, only about 30% growth per year. 30% growth per year. So of course, again, this is anybody's guess. You can disagree with the analysts. Analysts may not always be correct. So in fact, analysts, if I were to use their numbers, what I'll do here is this: I'll put here 30%. And to be fair, maybe I shouldn't ask for 17% required return. So usually max, I put about 15%. 15%. Okay. I am looking at fair value of $88. $88. Okay. So put it this way, I think this is a bit low, but if it ever go to 88, by the way, did it ever go to 88 below? Let me just take a look. I don't think so. What is the lowest it went? In fact, quite close. Can you see? Yeah, quite close. Okay. So if it ever go below 88, yes, that is what I will actually go in and buy. Okay, I'll be very comfortable. Okay. If I want to pay anything higher, that means I must be confident that it should at least be higher percent. I think personally, a maximum I actually put is 50%. 50%. And yeah, okay, I probably, if I really like the counter, really want to gamble, 165. 165 is my number. So hopefully you have an idea of this exercise. Okay, end of the day, DCF is just a tool. It's not like a Bible or black box. It can help you to make some decision, give you some suggestions. Okay, you yourself, especially for growth stocks, you have to put in some judgment. Or then after that, you can play around and see what makes what you're comfortable with. Okay, that is anybody's guess. So again, what I've changed is this. Okay, this one. Okay, if I were to revert, it's actually back to 61%. And this one, okay, usually if you want, we kept at 15%. 15%. But if you actually want to be a bit more conservative, we keep it at 17. But usually we kept it at 15. So the only thing one is actually just change here. Okay, so personally, as I mentioned, yes, I do like this stock, and probably I will only be interested when it's below 160.